10 points higher for the Nifty earnings season continue. Let's welcome in the management at Yes Bank. Mr. Prashant Kumar is now with us. Sir, strong NII growth. What is contributing to this particular growth, and importantly, how sustainable is this?
So basically, there are two things. Like if you see in terms of net interest income growing by 32%. One of the reason is in terms of advances growth, which is 11%. But I think the most important is in terms of mix of our loan component. If you see in terms of retail is growing at 43% and SME is growing 19%, mid corporate is also growing at 34%. So actually, if we see the overall number of 11%, it is mainly because of the 18% reduction on the large corporate. But loan growth is going up, NIMs are improving, and one of the major things for improvement of the NIM is also in terms of the yield on advances has grown by 50 basis points, whereas we have been able to curtail the cost of the deposit by 10 basis points, even in the rising interest rate scenario. Going forward, we are expecting that mix of our loan book would continue to tilt in favor of retail, MSME, and mid-market, which would give us the higher yield. And since we are working very strongly on the growth in our current account and the saving, I think even in the rising interest rate scenario, we would be able to have quite a reasonable control on the cost of deposit. So going forward, we would be seeing improvement in both NII as well as in the NIM.
Good morning, Mr. Kumar. The bank's target for Kasa is what, 35%? Tell our viewers how that is going to be achieved in this super competitive market.
So if you see like our current account growth has been 21%, the saving account growth has been 18%, and term deposit is 11%. And even like the current account end of period growth is 21%, but on the average balances, our growth is 38%. And similarly on the saving bank, also our average growth on the saving bank is also 30%. I think that is helping us in terms of controlling the cost of the deposit. And going forward, I think we will continue to work on this. So we don't work on the end of period ratios. I think we work on daily basis. And if our average CASA ratios are improving, that actually help us in reducing the cost.
But how exactly are you looking at competition? What's going to be the impact on the cost of funds as well as, of course, the NIMs?
So cost of deposit definitely, if you see in the current interest rate scenario, would start going up. But it will not impact our NIMs because if you see the proportion of our retail and MSME loan is moving up, which is now 54%. And the retail and MSME, the advantage is they are linked to the external benchmark. They are not linked to the MCLR. And whenever there is a change in rate of interest, this is also passed on in our cost of the loans. So our NIMs are not going to be impacted going forward. Definitely the cost of deposit would continue to move northward. But since we would be working on retail Kasa, which is the current and saving bank, and the term deposit, where we see the most of the banks are increasing the rates, I think there we would be like definitely growing. So there would be an incremental cost of deposit going up, but I think overall it would not impact our NIMs.
Right. Your provisions, though, have risen, impacting your profit. Tell us a little bit more about it. Where is it that you see the credit costs trending going forward?
Actually, this was just one-off quarter where there was a provisioning requirement of 750 crores in just two accounts. So this is like a one-off. This is not like a normalized thing. Our net NPA ratio has already come to 3.6%. Overall credit cost going forward, we will be able to contain within 50 to 60 basis point. And if you see our slippages number are continuously coming down, and the slippage as per our guidance, which was the 2%, I think we have been able to contain. And even in this quarter, if you see the provisioning requirement, the provisioning requirement on account of slippage was very minimum, just 10%. 90% requirement came from the aging provision. So as our net NPAs are continuously coming down, I think going forward, we are not going to see those kind of things. And this was just one of the quarter where the two large provisioning requirement came.
Sure. You know, your loan growth has been lagging your peers. Are you calibrating growth now? Where is it that you expect your loan growth to be at, say, for fiscal FY23?
We are not calibrating, but definitely what we are seeing, all our engines like on retail, MSME, and the mid-market, it's growing very well. Retail is 43%, MSME 19%, mid-market 34%. The overall number on the loan growth is because of the 18% reduction on the large corporate, which is also on account of, I would say, 2-3 factors. One is definitely some of the scheduled repayments which are happening. Second, also in terms of our strategic call, where we would not like to underwrite any loan, or we would not reduce our rate of interest on the large corporate. So in some of the cases, it's a refinance case where the other banks have taken at a rate of interest which does not make commercial sense for us. So I think it is not like a calibrated loan growth, but I think this is absolutely in our strategic direction. And this 18%, like last quarter, it was 9% reduction on the large corporate. This quarter, actually, there were some prepayments and there were some recoveries in the stress loans, which I think is good for us. So overall, we are not worried. And I think year end, we would be definitely clocking around 15% loan growth overall.
Right. And what then would be your recoveries guidance? Would you increase that?
Our recovery, say, target was 5,000 crores. We have already done 3,100. And I think we are going to see a good traction. And we are quite confident to exceed our target of 5,000. Last year also, we have done more than 7,000. But this time, the best part is that out of 3,100, most of the things are coming from the recoveries. Upgradation is just 300 crores, which is just 10%. And 90% is actually coming through cash recovery. So I think this is something which is very, very good for us in terms of benefit on the P&L and also benefit in terms of the provisioning right back. So I think the recovery momentum continues.
Right. You know, the other thing I also wanted to understand was the timeline and steps for your fundraise that you're planning.
So already approval from Competition Commission of India has come for both the investors. And now we are just waiting for the regulators' approval. The moment that happens, which we are expecting to happen during the current month, means I will be saying October end or November. And within the regulatory approval, within 15 days of that, the capital would actually come into the bank. So hopefully it should happen in November.
Before we let you go, can you share with us the timelines as well as the steps for the asset reconstruction company? You know, what is it? The gross NPAs, they're all going to be taken over by the ARC?
This transaction on transfer our asset to ARC should happen within November because we are working within a very tight timeline and we are quite confident to conclude within November. And after this transaction, our gross NPA would be in the range of around 2% and net NPA would come down to 1%.
Okay, Mr. Kumar, we're going to leave it at that. Thank you so much for being so candid with us, whether it comes with the plans of the asset reconstruction